Top-down analysis made simple with smart money. Welcome to the last of the series. Remember, order blocks occur on all time frames. Large institutions and banks are basing the majority of their trades on the higher time frame charts. Their orders are so large that many times they need to be split up into different blocks. While trading the smart money strategy, we do not look to predict price moves. Rather, we wait for smart money to move price initially. And our major strategy to detect smart money movement is by identifying the order blocks. Order block is considered a market behavior that indicates the pileup of orders from banks and institutions. We have bullish and bearish order blocks. So, what characteristics do we need to see on the chart before we conclude that it's a tradable order block? Number one, it must actually take out liquidity. In bullish order blocks, the red candle before the green impulsive move must take out liquidity first. While in bearish order block, the green candle before the red impulsive move must take out liquidity first. Just hold on. We are still going to discuss better on the chart. Number two, we must see an impulse movement away from the order block. Number three, we must see a break of market structure. I talked about market structure and the break of market structure in the last video. Number four, the impulsive candle must be an engulfing candle. So these are the four major points we need to validate before confirming whether an order block is tradable or not. We can ignore rule number 1 and 4 in some trades, but rule number 2 and 3 is significant. That is, we can do away with liquidity and engulfing rule, but the break of market structure and impulsive move are a must. Suppose you can find all 4 rules. That's perfect. For position traders, always search for the order blocks on a monthly or weekly time frame. Then you can use daily or H4 time frame for your entry. For swing traders, always search for the order blocks on a weekly or daily time frame. Then you can look for your entry on H1 and M30 time frame. For intraday traders, always search for the order blocks on H4 and H1 time frame. Then you can look for your entry on M15 and M1 time frame. So, how to trade this source pattern easily? Number one, identify a liquidity grab, which we can see here. Price clear above the previous high to take out liquidity. Number two, confirm your source pattern, which is the order block here before the impulsive move. Number three, we must see a break in market structure. And here, the impulsive bearish move broke below the market structure here. Number four, market has to trade back to the order block here, which will be our entry point. You can use the Fibonacci retracement tool here for confirmation. Connect the low here to the high here and wait for a retracement to 50 or 61.8 or 78.6 Fibonacci level. The best entry is 78.6. Number 5, take profit on the next order block you can find. This pattern is for a sell position. The inverse is for a buy position. Here, the market creates a new low here, then induces people to buy to a new lower high here. Later, went down to break below the previous low and take out liquidity, before making this impulsive bullish move. Then, this region before the impulsive bullish move here is our source order block. So, we are actually expecting the price to trade back to the order block here before entering a buy position. Note, this pattern can be on any time frame. Here on the chart, we can see a typical sell example. Price went up to break above the previous high here and take out liquidity, before making this impulsive bearish move that broke market structure here. Here is our order block before the impulsive move that broke the market structure here. So we waited for the price to trade back into the order blocks before we sell. Here is another example for a sell position. Put some time into looking at the charts so you can start seeing the overall price swings. Below is an example of market structure breaking on the 4-hour chart to the upside, and then dipping back into an order block. You can use the Fibonacci retracement tool here for confirmation. Connect the low here to the high here and wait for a retracement to 50 or 61.8 or 78.6 Fibonacci level. The best entry is 78.6. Below is market structure breaking and confirming even further with another order block highlighted here. 2 to 3 months of chart study using these concepts, and you will start seeing a whole different world of price action that is available to you.